Simon, you're live.
Okay, hello everybody, it's Simon Dixon here, and we are here for another AMA live session. The format of these, just while we're waiting for people to arrive, I'll go through the format. The first half, we cover a particular topic which the viewers asked for. Last week, we did Bitcoin and tax avoidance, and we covered that. Not my most favorite topic in the world to cover. But by popular demand today, we're also covering not my most favorite topic, but a very important topic, which is Bitcoin and money laundering. And so while we're just waiting for everybody to arrive, the idea is that we will be spending the first half of the show discussing and setting the scene around what I think are the key points everybody needs to be aware of with regards to money laundering. And then we'll go into some of the investment opportunities that actually creates that I've been investing in as well. And also how it actually affects you and some of the big picture trends. And then the second half, we go through, Azad is here. He'll be moderating on the live chat and he'll be picking out some of your questions. We'll pick as many out as we can, but make sure they're good questions because we can't get round to everyone's. But we'll pick out as many as we can on anything you want to cover: Bitcoin, the economy, investing, banking, whatever you want to cover on this live AMA. So again, we'll get started on the main topic shortly, just while we're waiting for more people to arrive as YouTube sends those notifications. Make sure you subscribe. If you haven't subscribed already, hit that bell symbol, and each and every time we go live, YouTube will send you a notification. And also, if you want to ask questions, contribute in the live chat. If you're watching the recording of this, use the comment section. We'll try and return back to them, or grab me on Twitter at Simon Dixon Twit. And we're going to jump straight into the topic. So although money laundering might seem like a really, really boring topic to cover, it's actually one of the most prolific topics in terms of how it will affect you in the future. So it's really important to have one finger on the pulse in terms of this, because we can look back at history and see where it's actually taking us. And so that's exactly what we're going to cover today. So the first thing I'd like everyone to fully appreciate and understand is that anti-money laundering is a process really that financial institutions have really been forced to actually take on. And that was a shift. It wasn't always the case. It was normally, law enforcement and crime prevention was by law enforcement authorities. But very deliberately, it shifted to financial institutions. And because of that, the world has got incredibly inefficient, and financial technology companies have all had to innovate, and compliance has almost become like this multi-billion-dollar business. Because what these money laundering laws tend to do is introduce lots and lots of middle people. And so Bitcoin and blockchain really try and take out the middle people so that it returns back to what it originally was, which is a criminal fighting governments and law-abiding, the police and people trying to enforce the law. And so these shifts and trends are really what is important to understand. It's also important to understand what is the main crime that is being prevented here. So most of the time, it will be pitched as anti-terrorism, and that's because the anti-money laundering laws really became a huge thing after 9/11. And 9/11 was really the catalyst event that introduced so much inefficiency into the financial system that we all started to really blame financial institutions for things that they're actually legally obliged and forced to do. Because these financial institutions, I operate, a company called Bank to the Future. We're a securities business, and part of our licensing means that we have to actually comply with all the anti-money laundering laws and regulations. And we have to employ a compliance team. Pretty much 80% of my time is based on compliance. And it causes lots and lots of inefficiencies and problems. That actually means that's all because the financial institution has to do that. So it's part and parcel. And it's all because we've accepted a world whereby we think that the money that we have at a financial institution, it's okay that it's not our money. So when you deposit your money at a bank, if you've watched any of my videos, you'll know this a million times. You would have heard this, that the money is not yours. And therefore, when it's not yours, they can spend it as they choose or block transactions, and also some of the other properties of money. But really, I'd say anti-money laundering is really code word for tax collection. The main crime that they're trying to actually stamp out, and the main crime that they're more concerned with, is actually ensuring that you're paying your tax. And that's because the governments all around the world have outsourced money creation to the private banking sector. And money is created every time it's issued a loan. And therefore, governments run excessive debts. And we're reaching the phase right now where their debts are so big that the money that they collect from taxes is almost equal to the money that they have to pay on interest on all their bonds, which is money essentially lent to you via the pension system. I'm sorry, that you're lending to the government through the pension system, because a big chunk of your pension is invested in bonds. And therefore you have this circular flow. Part of that is, the reason that they need to collect excessive levels of tax is because fiat money is a regulated Ponzi scheme, the largest regulated Ponzi scheme in human history, where the money to pay off the debt doesn't actually exist. And the interest payments on tax now is on the government debt is reaching the phase where it's almost equal to tax collected. And so therefore the debt can never, ever be paid off. And so governments need to find more and more ways of actually collecting that tax. And as I talked about in previous videos of my book, Bank to the Future, which I wrote back in 2010, the trend, if this continues, if we don't have radical monetary reform, is that you end up in 100% tax environment, i.e. socialism, and depending on how that's organized, closer to communism and Marxist economics. But anyway, the main crime that they're trying to prevent is essentially tax avoidance. And we created a video on tax avoidance and Bitcoin. And this one, we're going to be covering Bitcoin and money laundering. There's also obviously crimes which, from my perspective, should not be crimes, but they are crimes in some countries, and one country at a time, they're becoming not crimes. So drugs and war on drugs is an example of that. The amount of money and money that taxpayers have to pay to enforce some of these wars on drugs, and state by state and country by country, it's becoming something that the world has recognized probably shouldn't be illegal. And so therefore you've got these crimes that occurred simply because drugs are illegal. And that is a shifting trend in the world. So the war on drugs, I see, is not really something that will continue into the future if we're looking at future trends. Country by country, I think drugs will be illegal everywhere. And then they can regulate it, and they can find, one of the reasons that Bitcoin is so associated with crime is because in the early days of Bitcoin, a very efficient website was created called the Silk Road. And the Silk Road was a way of taking drug crime off the street and allowing people to purchase drugs online. Because they couldn't get access to banking and financial services for obvious reasons, the Bitcoin was used as a way of transacting in this efficient marketplace that had a significant reduction in terms of the amount of drug-related crime, because people were buying their drugs online, and it had a voting and ranking system whereby if a drug dealer was trying to actually poison you, like happens on street crime when drugs are made illegal, they would get a bad rating, bad reviews. And actually, it really created a more efficient marketplace, and started to have a material impact on the amount of drugs that were dealt on the streets. And therefore, it was a safer way to transact because humans are going to take drugs. And this trend is moving towards, that becoming something that the consumer can actually decide rather than law enforcement deciding for you. But anyway, the real trigger for this change. So, up until this point, it was really up to law enforcement to detect crimes. But after 9/11, because I was working in a stockbroker at the time, and one of the things that they did to try and track detect who was behind 9/11 is they went to all of the financial institutions, all of the stockbrokers. And one of the things we had to do is look at, when I was working in stockbroking, any accounts that were shorting the market prior to 9/11. For those of you not familiar, shorting is a way of making profit from a falling market. And many people knew that 9/11 was going to happen if they were connected to this. And therefore, they shorted the market to try and make a lot of money. And this was really the real, banks were being held responsible for any crimes that happened through their financial institutions. But this is what really accelerated it. And so what you often see throughout history, and this brings us to where we are today as well, is that you have a big catalyst event like 9/11 that drives lots of fear into people. And that fear is then used to justify why laws are being changed. And you think, well, it's okay to give up some of my rights and my right because, the crime is so bad, and that's driven by a lot of fear. And so then they say, well, once we've actually got through this phase, we'll reverse those laws. That's exactly happening today with privacy. So due to the health crisis and the current situation, people are deciding that it's okay to give up some of their basic rights because they want to be tracked so that people can find out who has the virus. So then they can get out of their houses or they can get on planes as the economy tries to get back to normality. And therefore, laws are being introduced to remove privacies, your basic privacies. And therefore, the means to the end is being justified because the fear is so bad. So these law changes always happen around particular times of big fear. And we're seeing that right now with the removal of, laws being introduced to try and remove encryption, to try and remove private communication, subpoenas to companies to try and get all the data, and all sorts of things happening right now, all in the name of making sure that we get out of this health crisis. So that's one of the trends that you need to really be aware of and keep and look at right now. But where Bitcoin comes in is it's really interesting. Firstly, in the previous video where I talked about Bitcoin and tax avoidance, I said that it's actually because Bitcoin exists on a blockchain, and a blockchain is where supercomputers all around the world verify every transaction. And these records are backed up on this decentralized network verified by miners that receive newly created Bitcoins every time they verify these transactions and store the entire history of all transactions. Because that exists, it's virtually impossible for a government to take down Bitcoin, which also means that the records on the Bitcoin blockchain are as mutable as immutable could be. Much more immutable than any central bank, any financial institution, any centralized company that is backing up on multiple sources. Bitcoin's the most backed up database that exists today, powered by the largest supercomputer that's ever existed in humankind, which makes it extremely hard to take down. That also means that if you actually commit any crime on, using Bitcoin, then it's basically got pseudonymous properties. Pseudonymous means that it's not like a bank account. When you open up a Bitcoin wallet, or it doesn't mean that you have to actually. So there's centralized and there's Bitcoin the way it's designed to be. It doesn't mean that you have to connect an identity to that transaction, and you can have as many Bitcoin wallets as you want. But everything you do with that Bitcoin is immutable and the records will be there forever. So if in the future they connect your identity to some of these transactions, then there's no plausible deniability here. The connection, once the connection is made, those records are there forever. So what Bitcoin does is it essentially takes out the middle people. So we get this really interesting hybrid debate that we're going to have in the future, and I'm sure there's going to be many questions asked around, does Bitcoin allow you to achieve a better than the current solution? And the answer is that we need to start looking at, some of the properties. So where was money laundering before these big trends in 9/11, where it was really pushed onto the bank and financial institution in order to detect this crime? And therefore they have responsibility where they can be fined and go to prison if they allow any of it to happen through their financial institution. Well, before that, it was the person committing the crime and law enforcement, the game of the cat and mouse game. Introducing the financial institution in the middle caused lots and lots of problems. And so if you can take out the middle people, which Bitcoin does, where it's peer-to-peer, so if you commit crime with a transaction and then you do it through Bitcoin, you get this immutable record. So law enforcement can attempt to try and connect your identity to that transaction. But you don't rely upon the middle person, the bank and the financial institution. You take out that middle person. So really, this brings the transaction back to what it was before the really, really aggressive anti-money laundering laws were introduced, whereby the responsibility to detect the crime was put onto the financial institution. And I'm the first to criticize banks, but banking is actually a systemic problem. A lot of banks get a lot of stick because they're simply enforced to do what these laws and regulations are asking them to do. Now, you have the relationship with the bank, so therefore you blame the bank and you think it's archaic, some of the things they do. But believe me, none of these financial institutions want to do any of this stuff, have to do this stuff. And really, it creates this lose-lose situation because there were some really, really interesting studies done. And the way that these financial institutions like Bank to the Future, that we have to actually adhere to these laws, is that you have to get identity and documentation from every single one of your customers. The rules are called Know Your Customer. And each year, the rules get more and more aggressive, harder and harder and harder. And we reach this stage now where us as individuals, as consumers, we need to chuck away really important documents and we need to put them into all of these different financial institutions, hope that they have good policies for protecting that data. But even then, the largest financial institutions still, have it's not a blockchain whereby this data is immutable. You're still relying upon this data going into these servers. And then you have laws like, for example, in Europe, you have things like GDPR. And actually, it creates this really strange scenario. So today I had our compliance meeting, and some of the things that we have to do to comply with anti-money laundering laws are actually in direct conflict with what we have to do with GDPR laws. And so therefore, you get these really strange scenarios where you can't simultaneously comply with all laws, but one of them sends you to prison, the other gives you a fine. And financial institutions need to choose between these things, which puts us in a crazy situation. Us as individuals, we need to give all of our data, and that data then can cause lots and lots of problems for us in the future because there is anti-consumer protection in order to comply with all of these anti-money laundering laws. The reason that you have to do that is because if the financial institution can detect that this might be the proceeds of crime in any way, or tax wasn't paid on those transactions, then they have to file a suspicious activity report to law enforcement. And therefore, what tends to happen is 99.9% of these transactions have no suspicion associated with them. So we create this scenario where we're punishing 99.9% of the world for the tiny 0.1% of people that are actually committing crime. And so it's very inefficient when we have all these middle people. And as I said, this introduces lots and lots of different costs. It means that the financial institution produces a worse service for its customers. And then this multi-billion-dollar compliance industry emerges in order to try and help companies comply with all their obligations. And that inevitably increases the costs and makes it worse for the law-abiding customer in the end. There was actually really good studies done where they said, I think there was 1 year, I should have actually prepped up for this, but you'll get the point. There were about, if you take the US, for example, there were about 16 million in 1 year suspicious activity reports filed to the law enforcement, which is for money laundering in the US is known as FINRA. And 16 million reports, but only a minute amount of them actually led to criminal convictions. So we're chucking away all of this, crazy data all around the world online. It's become impossible to actually, sign up to financial institutions, and all because we're trying to, detect those tiny, minute people that are actually committing crime as a result of these suspicious activity reports being filed. And at some stage, we need to look at what is the cost benefit analysis to actually these principles. But one thing is for certain, each year, anti-money laundering laws are getting bigger and bigger and bigger and bigger and bigger and bigger. So this trend is not about to be reversed. And things are about to get a lot harder for everybody. And when you introduce things like these events, like the health crisis we're in right now, you tend to have, these laws being introduced, and therefore we question them. We don't question them in the name of fear, but it's very important to bring these things and actually debate. And really, this is where several innovations happened in the Bitcoin space. So firstly, I still don't think that Bitcoin is a good way of committing crime. And we saw that with the bust of Silk Road. What did we see what did we learn from that? Well, Silk Road was this marketplace that allowed people to transact sufficiently in order to purchase drugs online in a safe way without actually having to deal with gangsters on the streets and risking your life. And so, but eventually, they connected, the person that was actually launched that website, who's now in prison for life, and they connected their wallet addresses to the crime, and therefore all of these records were actually used by law enforcement to try and do that. What is really interesting is that before, it was actually after that, the corrupt FBI agents were actually threatening the person that created the Silk Road and bribing them to send them some of their Bitcoin. And so the FBI agents actually ended up in prison as well because they were trying to actually confiscate some of that Bitcoin and were using it as a ransom for the creator of Silk Road, and the plot thickened. So this is one of the big problems. That we are assuming that law enforcement can be trusted. And so this is really what came out of the Snowden revelations, that once you give up all this data, it actually might be used for the right reasons in the first place, but we also need protection from the government using that data in the incorrect way. And so this is why forces like Bitcoin became such a political subject, because websites that are designed to keep governments in check, for example, WikiLeaks, actually are banned and censored by the financial system, all because of these anti-money laundering laws. But at this stage, it's not actually a crime. What they may be doing there, it's keeping governments in check so that we can have a more honest system. That's the way it was designed, that you have governments to implementing things through a democratic process. And then you have, freedom of information and freedom of the press to try and keep the government in check. And that's what WikiLeaks was trying to do. Fortunately, Bitcoin existed because one of the properties is that it cuts out the middle people and it allows WikiLeaks to actually transact directly. Now, if those individuals are actually committing crime, then it's back to law enforcement to detect those crimes, and individuals committing crime need to accept all of the responsibility and risks with committing that crime rather than having that financial institution in the middle. This is why we're seeing a really, really big trend around decentralized exchanges, because a lot of those inefficiencies, if you take out those inefficiencies in the middle, then you're putting it back to an individual and law enforcement, which seems to be the one of the major trends that are taking out middle people, decentralized exchanges. We have seen cases though where organizations like the SEC, who is the securities regulator in the United States, actually started to prosecute some of these decentralized exchanges as the exchange operator. We saw the Ether Delta case. And now that while that was around securities laws, because it was listing securities without having a securities license, it shows that law enforcement can actually try and target people that create these websites if they're not complying with these certain services, which is where blockchain becomes a really important thing, because essentially blockchain is one individual transacting with another individual. And then if they're committing crime, that's up to law enforcement at that stage, which is where I think this is where everything is headed as we move to this more decentralized finance movement, as we move towards money that you can actually own. But remember, it doesn't mean that criminals get a free pass, because you have this immutable records. And obviously with new technology, you always have this cat and mouse game between the criminals and law enforcement. But really where this actually goes is I think we get this hybrid in the middle. The rules around anti-money laundering are going to get harsher and harsher and harsher. Cash is going to become illegal. And eventually you're going to converge upon these central bank digital currencies, which will have anti-money laundering laws baked into the money. So eventually it will have, automated tax collection, and the central bank digital currency will be introduced as a way of actually, getting the trends that they will use in order to introduce these central bank digital currencies will be around, helicopter money, bailouts. I've covered this in many other videos. Check out Lockdown 2. Check out the video I created on the real estate market crash to understand why central bank digital currencies will be used in that. But at the same time, you'll have this force which regulates regulators, which is Bitcoin, which is an opt-out of the financial system. But also it does achieve, as I said, because it has immutable records, that you do have the ability for law enforcement when people commit crime to eventually connect an identity to these transactions, and you get kind of this enforcement, this rules in the middle. Now, obviously, because privacy is so important, there'll be lots of privacy enhancing features. But eventually, I think we're going to converge on a world, and this is why I'm investing in companies that allow you to actually control your own identity data. One of the companies that I recently invested in through Bank to the Future is a company called BlockPass. And BlockPass essentially allows you to own your data, and you can share it through opt-in through different financial institutions that prevents you having to create this KYC again and again and again. And you control the data and you opt in to share it, and it's shared in a secure way. And I think this is really going to be the end. I don't think the governments are about to give up and change their desire to collect taxes and prevent crime. So therefore, you have this horrible world that we're in right now, where you have to give up your freedoms and privacy, and risk your data. But in the future, I think because Bitcoin allows you to own your own money, I think it also is going to allow you to own your own identity in the future. And therefore, we have this hybrid model whereby you can opt in and share it in a more secure way once you own the private key to your data, just like you can own the private key to your money with Bitcoin. And so really the trend is clear to me, that this is where I think we're actually going to end up in the end, where you have to be able to control your identity, be able to share it in a secure way. And then therefore that brings more, control to the individuals. And therefore, when we have this financial system, these two different models, you have the central bank digital currency where they automate all of these laws into the central bank digital currency. And you have the opt out of the financial system by allowing the individual to transact. And therefore, it moves to that world where law enforcement is responsible because there is no middleman to hold liable for the crime prevention. It's just simply the criminal and the law enforcement. So that's where I think is actually going. The reason for that, as I said, pretty much 80% of my day, because I run a financial institution called Bank to the Future, is spent on compliance. Really, really inefficient. Customers obviously have to then share a lot of that data. And we have to come up with interesting financial technology to automate that process and make it more efficient for individuals. So these are really, I think, the key trends. As an investor, I've been building an equity portfolio in companies that make that process more efficient. Really looking at how we can invest in companies that allow you to control your data and make that, reach this world that I think we're going to converge upon. And also supporting movements like Bitcoin, which allow the middle people to be cut out so that then you can actually do things in a peer-to-peer fashion so that it can move to individuals versus criminals versus law enforcement if you are committing crime with those cryptocurrencies. In summary, cash is still the king when it comes to money laundering. Far more money laundering happens through banks than it does through cryptocurrencies. And the reason that we know that is because if you look at the data in terms of the trillions that are laundered through money, the Bitcoin and cryptocurrency market only currently has a market cap of about 200 billion. And trillions is laundered. So US dollar is still the number one currency for money laundering. Banks are still the number one financial institution for committing money laundering. And cash is still the most efficient vehicle for actually committing money laundering as opposed to cryptocurrency, despite the fact that many law enforcement individuals or governments with different agendas will try and attach the two together. We've seen that this is something that they try to do as propaganda to try and discredit the growth of Bitcoin and connect it to many of these crimes, and still many people think that that is what Bitcoin is. So that's most of the topic that I wanted to do. I think I got exactly halfway through. So Azad, let's now take questions. We can continue on the subject of money laundering based upon some of the discussions that happened, or we can also switch gears on slightly different questions. So over to you, Azad.
Yeah, very interesting stuff you've just been sharing with us. First of all, before I... Hello, can you hear me?
Yeah, we can hear you.
Oops, slightly disconnected there. Yeah, we've got a lot of questions in today. So, but before we begin, we've got 114 people watching. We'd really appreciate it if you'd smash that like button and share this content with your friends and family on Facebook, Twitter, etc. And follow Simon Dixon at Simon Dixon Twit. That's TWITT. So the first question that I've got for you, Simon, is related to money laundering. I think it's quite a valid one based upon what you've just said in the last segment. What, in terms of the central bank, sorry, I've just lost my bearing here. Yeah, so in terms of money laundering that applies for consumer protection, what protection is there for consumers with regards to the bank's activity on money laundering itself that we've heard about?
So we're mixing a couple of different things here. So consumer protection is about protecting the consumer from the regulated institution or financial institution. So if I, for example, an individual wanted to sell an investment then consumer protection laws and securities laws are put in place to ensure that, or to try and prevent people or hold them accountable for misleading investors into something. So that's consumer protections. When it comes to things like consumer protection against a central bank, you don't have many consumer protections. So there's one rule for the government and there's another rule for individuals. It depends how, independent the central bank is from the government. And so central banks have different roles. Financial stability is meant to be one of them. Controlling inflation is meant to be one of them. And ensuring stability within the financial system, as you said, lender of last resort to banks. And central banks commit crimes all the time that would be considered criminal in many, many respects. And I don't think they're ever held accountable. I've never seen personally a central banker held liable for some of the crimes that are done on humanity. One of the interesting cases as well was one of the really early Bitcoin companies BitInstant got itself in a situation where it was dealing with some of the Bitcoins from Silk Road. And the founder actually ended up going to prison for money laundering as a result of that. But at the same time, HSBC got caught smuggling truckloads of dollars between America and Mexico through the Mexican border in billions and billions of dollars. And they just got a slap on the wrist and a fine, and no one went to prison. So you see the hypocrisy of some of these forces. That happened. The founder of the BitInstant got arrested on the same day that HSBC got busted, laundering money from the Mexican drug cartels. So you can see the sheer hypocrisy in these situations. But the closer you are to the central bank, the less likely you are to be held accountable. Or you just simply print some of this money. Central banks, create some new money. The banks have access to obtaining that money. They can get it because interest rates have been suppressed at near 0%. The banks can actually just gain some of that 0% interest-free money, pay the regulator's fine. The regulator then gets this multi-billion-dollar fine that then allows them to create a bigger tower and pay more wages and issue more bonuses within the regulatory environment. And so you've got to recognize that half of this is also about or us, and freedoms are important because we need protection from crimes that happen in the people that are actually trying to prevent these crimes. I don't think that has ever been more of a front issue than it is today, with a lot of the heat that police officers are getting at the moment with some of the Black Lives Matter protests and movements at the moment. But also this happens at the regulatory environment. This is why Bitcoin to me is such an important thing. I don't think it's going to disrupt fiat currencies, but it gives people a choice of opting out of the financial system. So as fiat currencies get worse and worse, you can choose to opt out, and therefore it makes fiat currencies better, which I think we're going to get, because they have to compete with the exit from the financial system. And the choice is the important part, and Bitcoin becomes a force that regulates the regulator. And that's why I think one of the reasons why it's such a controversial subject, because it creates checks and balance on fiat currencies and these more legal entities and governments.
Okay, just another one on Bitcoin related to money laundering. We've got a couple of people who are arguing the case that Bitcoin is the dominant and de facto currency of the dark web and the gray web, as they put it. Dark markets are currently the leading indicator of Bitcoin adoption. What's your take on that, Simon?
I don't think the dark markets are the leading indicator of Bitcoin adoption. I think store of value is the leading indicator of Bitcoin adoption at the moment. And they've done lots of studies on this, and they've showed, I think it was even There's been many studies from central banks and government institutions that they found that the amount of Bitcoin crime that was happening through Bitcoin is way less significant than the dollar. And there's been many reports out there on this subject. So Bitcoin is used on the dark markets. It sure is. I think that the privacy coins have also taken some of that market share. Coins like Monero and other ones that are really centered around keeping the transactions more private. And if criminals still want to use Bitcoin, I would suggest it's not a very good idea. But if they want to use that, they will utilize that technology, and they will try and use more and more innovation to try and conceal their crimes. But personally, I would much rather use dollars than Bitcoin if I were committing some type of crime or fiat currencies. So yeah, it's used on the dark web, and we've seen people get arrested eventually when they can connect that identity to the transaction.
Okay, I'm going to mix this up a little bit, get it a little bit more controversial. 9/11 or Trump 2020? Which one's worse?
I think they're both going to have the same impact in terms of the shift in the world. 9/11, because it was the ginormous impact of these anti-money laundering laws, all in the name of counterterrorism. In 2020, it's going to be complete removal of privacy and introduction of central bank digital currencies, which are going to be the final nail in the coffin for privacy. And I think the impact's going to be just as bad. So it's a really tough one to call which one is going to have a worse impact in terms of our freedoms. But I would say that they follow on from each other, and the impact is going to be pretty much the same. And the inevitability of the system is that we're moving towards socialism and Marxist economics anyway in all of these countries, until we actually decide to protect capitalism by having a monetary reform. And this is the decisions that countries are going to need to make, and we're going to get those decisions in the years ahead.
Okay, with the shift of the world becoming a cashless society and everything gone digital, how is it possible for there to be such a thing as money laundering, as money laundering is more possible with cash? Or am I mistaken?
Absolutely. Cash is still the best vehicle for laundering money because it's got full anonymity. I believe that they're going to be, I'm sure that they've introduced traceability into cash in the new notes that have been actually printed. And I'm sure there's all sorts of things to try and introduce that. But yeah, the reason that they want to eliminate cash is for two reasons. One, because that is the predominant force for money laundering. And two, tax. Remember, the number one crime that they want to prevent is they want to get paid. And so therefore, tax evasion means that we're definitely going to converge upon illegal cash. And that war on cash is lost. We don't even need to debate it anymore. It's gone. The war on cash has been won. The government won. It's gone. It's going to be, it will be gone. And there's no point even debating that. You need to start looking at how you're going to prevail in the digital sphere and the physical sphere, which is why Bitcoin and gold are such interesting asset classes for maintaining some of that, privacy that many countries in their constitution was a constitutional right that is being taken away from many people. These are the big debates.
Thank you very much for that. Okay, so here's an interesting one. Can Simon make his prediction of when traditional financial systems will come unstuck, i.e., when will the money printing become unviable?
The day that money print. So, firstly, you've got the Fed and you've got the world. So, the Federal Reserve, is the only organization in the world that can actually create money to actually buy treasury bonds, with the exception of the private banks as well, which create the digital currency. So you've got the private banks that create digital currency every time they issue a consumer or business or loan. And then you've got the central bank, which is essentially purchasing the treasury so that the governments can take on debt. And so you have a Ponzi scheme whereby individuals, businesses, and governments need to go deeper and deeper into debt in order to keep the system alive. Now, then you have other countries that can do that. Now, most of them, they will either not print money, which will lead to deflation, because, by the way, deflation is the cure. Deflation is what the governments are trying to prevent and the central banks are trying to prevent. But the cold, hard reality is that we have stimulated so much malinvestment into the financial markets that they are all being propped up by governments and central banks, and therefore it's no longer a market. They have made an indication that they don't want deflation. They don't want any asset price deflation, when that's exactly what we need. They got the world addicted to debt, consumers addicted to debt through the mortgage markets. And now consumers don't want deflation because they want the value of their real estate and property to be propped up by governments that are manipulating interest rates in a Ponzi scheme in order to try and get more banks to lend money so they can sell it to your pension in this ginormous circular Ponzi scheme that we are in today. And so the governments, what actually stops that, and what can be the end of that? Well, you've got the non-Fed, which is that if they allow for deflation, which, by the way, is a great thing because it means that you can buy your property. I mean, people want to buy real estate cheaper. We've reached a world where the majority of people just can't afford to get on the market unless you're in the wealthy 1%. And we're trying to stop property and real estate prices from going down so that people can no longer afford it. What kind of a crazy system do we live in? So deflation is secure because we've propped up these markets. It's going to be painful, going to reallocate capital to where it should have been before we got all this interventionism and socialist markets. So you have deflation is the inevitable result for most, which means recession and depressive environment, which is what has to happen to have this reallocation. But governments that don't want that will create more money, which can only then end up eventually into a deflationary environment, followed by an inflationary environment where the price of goods gets more and more expensive, and governments manipulate indexes like the consumer price index to make it look like inflation is under control, which is where we are today. What happens next, though, is eventually a lender, so the largest lender to the US government. So then you've got, the Fed. The Federal Reserve is the only one that can create those dollars plus the private banking system in cooperation with the Federal Reserve. Now, the Fed, eventually, the largest lender to the Fed is the People's Bank of China and the Chinese government, because they own trillions and trillions in treasuries. And your pension, and which is the creditor too, that has been issuing all these loans. But eventually, China decides, so the way that it all works with China right now, and I've covered this in previous videos, like the currency wars video, is because they have capital controls, because China exports all these goods to America, America buys them on their credit card, and then the money, so those dollars end up in the People's Bank of China. And the People's Bank of China then decides what do they do with all these dollars. Well, they lend it to the government again. So essentially, goods are being imported into China, being imported into America. Those dollars are then being exported to China. China has to print off more renminbi to give to the factories that were selling those goods because they got capital controls. And the People's Bank of China ends up with all these dollars. Those dollars are then lent to the government again through purchasing treasuries. But eventually you get some diversification. So People's Bank of China is trying to acquire as much gold as it can. And eventually it diverts more and more of those dollars over to gold rather than buying treasuries. And the credit rating, as essentially when the Federal Reserve prints more and more dollars, it exports its inflation to China and the rest of the world. And then eventually China decides that they're not actually willing to roll over that debt. They want repayment from the US. At this stage, when they can't roll it over through the treasury markets again, you have a complete collapse of the entire financial system. You have a liquidity squeeze, and you have a credit rating downgrade of the US government and the Federal Reserve's balance sheet, which is now in excess of $10 trillion by the way it's actually headed. When you get that credit rating downgrade, which is why you can't trust that credit rating, the reason that pensions are able to invest in certain products is because of their credit rating. Well, the highest credit rating is the US government, despite the fact that it's running these crazy insolvency situations. But eventually that credit rating downgrade has to happen, or China decides that it's not willing to roll over the debt. And at that stage, you lose the faith in the dollar. We have a system, the monetary renegotiation. Everyone sits at the table. The power is based upon how much gold to GDP that they actually have. And this is when we enter into the monetary renegotiation. And that's where I think that it will, it's everyone has a seat at the table, and they decide, just like in Bretton Woods, what the system's going to look like. And the US will obviously have less power as dollars become less significant. The other thing to actually understand is that dollars can go on for quite a while because lots of central banks are using it as an asset class, and it was negotiated as important during the Bretton Woods negotiations. And therefore, the amount of dollar debt that exists is sucking up the demand for dollars. And you see things like the milkshake theory, which is worth checking out, which is why you see strengthening dollars in markets right now, even though it's out of control. So a prediction for when that actually happens, I would actually forecast probably next year, 2021. I created in 2010 a video on my YouTube channel called The Great Depression of 2020. This certainly turned out to be the catalyst for that. But I think we're going to see something sooner than most people think. And I think in 2021, you could see a monetary renegotiation as a result of the Great Depression of 2020 that I think we've already entered into, but you won't be able to define it as that until we enter the history books of the future.
All right. Thank you very much for that answer, Simon. We've got 170 people in with us right now. So thank you everyone for attending. Please hit that like button, share this with your friends and family. Simon, just to end it on, because we've got about 8 minutes left, would love for you to end this now on a high note, but I'd like to sort of pre-frame it. We do get a lot of people following you on Twitter. And so we've got an interesting question, which I want to put forward to you. And I'm just going to describe it the best way I can. You've touched upon something which is hitting the nerve on a lot of people, which is the governments, the banks. They've taken control. They want to make use of their money. I think you were one of the first people to write on the subject of Bitcoin. I think one of the reasons why you started looking at Bitcoin and the innovation of finance and then became the CEO of Bank to the Future was for the many things that many people are looking for, those evangelistic movements, for people to actually start adopting what they perceive to be the people's money or the people's currency. So in your own way, Simon, if you can, just talk upon the vision, the future of money, the future of finance, what's happening, and what can we look forward to in these uncertain times?
Yeah, absolutely. We're going to enter into a two-tiered economy, which is the peer-to-peer economy, which is money that you can own, financial products that you can own, money that you can spend without a middle person, or financial products that you can utilize without a middle person. And you're going to have a quantitative tightening, which is really what we see with the Bitcoin monetary policy. Then you have the second financial system, which is a very convenient financial system in terms of making everyday transaction, which is the fiat system. But the fiat system, because of anti-money laundering laws, is going to be harder and harder for people to utilize, especially when they get wealthy. So most people don't experience the challenges of the financial system until they get wealthy. The financial system rewards people that are in debt and are living month to month. That's where they want you to be. They want you to have excessive rollover of debt continually. They want low interest rates so that you can borrow more, and they don't want you to save. They don't want you to be accumulating, through by not circulating the money on what they call the velocity of money. And they don't want any of those, forces to happen with fiat currency. So this drives us towards a two-tiered system. People that are using their fiat currencies to enable, more debt creation, and the removal of many of those freedoms, but a very convenient way of transacting on a small scale. Then in terms of large wealth, you'll look at, I think most people will be looking in the future outside, opting out of the traditional financial system for many of those reasons, because the efficiency of owning your own money, being able to transact it without middle people, because of these, really aggressive problems. And then also, the anti-climax of government monetary policy gives us, I think, this perfect hybrid world where you can get the best of fiat currencies for smaller transactions, everyday life planning. But then you have this alternative financial system that's ultra exciting. So Azad, you said in the beginning that, that's why I wrote that very first book. It was the first published book to include Bitcoin, Bank to the Future, Protect Your Future Before Governments Go Bust. And what I was really trying to figure out is a world where we could remove banks that own your money, spend your money, and are subject to the debt-based money creation system. And at the time, it was pretty much impossible. But now the technology exists in the years ahead for actually us to have a non-fractional reserve financial system. And that is ultra exciting. The opportunities to invest in that industry have just one of the caveats I do need to give is that the problems is that there's lots and lots of scams in the industry. There's lots of pitfalls. And so for me, one of the important parts of giving this education is to try and not help through, laws and regulations and all those types of things, but try and help through education. And so that's one of the things that I'm really excited about, bringing to market, how to really put together a retirement plan around this industry and just avoid some of those pitfalls. And the reason last week we talk about tax avoidance is because I prefer people to have a peace of mind whereby they can plan their taxes without actually having some of the anxiety and fear of having to break laws. The reason I talk about money laundering here today is so that people can actually plan their affairs, and that if they are law abiding, they can actually, use this asset class for all of the benefits without actually having to have the fear and anxiety like it's been in the past so you can prepare your banking partners, things like just basic things like inheritance and things like that. These are all really important things as you start to build a retirement plan around what I think the future of finance actually looks like. So we're excited to bring that to market in the months ahead. And I think that's a really exciting time. Two-tiered economy. Use the fiat economy for what it actually is, benefit from the good things that it does well, and benefit from the financial system outside of the financial system, and the savings related part of your finances. That was not a choice 10 years ago. That is a choice today. And that's why today is the most exciting time to be alive in financial history. And it will be a very large wealth redistribution as these shifting trends happen. And I think it's really important for you to be on the right side of that so that you can help other people as well and your loved ones, and make sure that they're more prepared for some of the shifts and changes. We're not in the same world. I did an episode of Bitcoin Hard Talk where I interviewed Raoul Powell. If you haven't seen that yet, the end message was change is coming, and I couldn't agree more. Change is coming. You need to be ready for that, and I'll keep creating content. And as long as you keep asking good questions, we'll keep doing this and help you prepare you for you being able to analyze what the right things are for you. So I think we're going to wrap it up there. Thank you, Azad, for picking out those questions. And I hope this subject, although could be conceived as a pretty strange subject, but I hope it helps you understand some of the trends ahead and prepare better for some of the things that are to come later down the line. So we'll see you next week. We've got more Bitcoin hard talks. If you enjoyed it, please help us out. Like more people to see this, like it. It helps us. YouTube algorithms mean it will display to more people. It was great seeing, I think we've had almost 55,000 to 60,000 views on the first episode of Bitcoin Hard Talk with Jim Rogers. Really appreciate everyone that contributed to that by sharing. Please do that again. And if you enjoyed that, please help us out because we are really starting to see the help that you've put in, and more people are seeing these videos, and it's really getting some momentum now. So awesome. And I'll see you next week.